Could covered calls be your smartest move for building monthly income in today's market? In this video, we're breaking down 5 top covered call plays for April 2025. Real stocks, real strategies, and real cash flow potential. Whether the market moves up, down, or sideways, covered calls let you turn idle shares into consistent income. I'll walk you through picks based on liquidity, fundamentals, and premium strength. No hype, just clean, fact-based ideas that are working right now. Stick around because stacking these opportunities could be the difference between just holding assets and truly making them work for you. Let's dive in. Why covered calls are perfect for 2025's market conditions. The 2025 market has been a grinder. Sideways moves, flashes of volatility, and lots of uncertainty about rates and global growth. This environment is tough for buy and hold strategies, but perfect for income-focused plays like covered calls. Higher implied volatility pushes premiums up, letting you collect more cash for writing calls. Meanwhile, a lack of strong bullish momentum reduces the risk of your shares getting called away at huge discounts. Covered calls turn market stagnation into an opportunity, generating monthly cash flow without needing to predict huge price swings. It's about working with the market's behavior, not fighting it. Exactly the mindset successful investors need right now. Criteria used to pick these 5 stocks. Picking the right stocks for covered calls isn't just about finding the highest premium. You need liquidity, strong fundamentals, and manageable volatility. All 5 picks today have robust options markets with tight bid-ask spreads, meaning you can enter and exit trades efficiently. They also have stable or growing earnings, reducing downside surprises. Moderate volatility ensures option premiums are juicy enough to matter without exposing you to wild price swings that could blow up the trade. Finally, all these companies are household names with strong balance sheets, meaning they can weather macro uncertainty better than speculative plays. Consistency is the goal, not moonshots. Pick number 1. Microsoft. MSFT. Microsoft remains a powerhouse for covered calls in 2025. With strong artificial intelligence leadership, a bulletproof balance sheet, and global brand strength, MSFT offers reliable stock stability and high options liquidity. You can routinely pull in solid premiums by writing calls 1 month out at slightly out-of-the-money strikes. This gives you cash flow while still allowing some upside participation. Plus, Microsoft's moderate volatility keeps premiums attractive without excessive risk of violent price swings. For investors wanting a sleep well at night covered call core position, MSFT delivers. It's a classic example of getting paid monthly while holding one of the most durable franchises in the world. Pick number 2. ExxonMobil, XOM. ExxonMobil combines 2 powerful forces: strong dividend payouts and excellent option premium yields. Even in a shifting energy landscape, Exxon's profitability remains impressive, fueled by disciplined capex and smart global positioning. Writing covered calls against XOM lets you double dip. You collect dividends while also selling premium-rich calls. With oil prices remaining volatile but generally supportive, the stock stays range-bound, ideal for covered call strategies. Option liquidity is outstanding, and you can easily find monthly expirations that balance premium size with manageable assignment risk. If you're aiming for monthly cash flow and love dividend stocks, ExxonMobil deserves serious consideration this April. Pick number 3. JPMorgan Chase, JPM. JPMorgan remains a standout in the financial sector, benefiting from higher-for-longer interest rate environments. Banks like JPM thrive on healthy net interest margins, and the market recognizes it. As a covered call candidate, JPM offers solid option premiums without the extreme volatility that plagues smaller financials. The stock has been trading within defined ranges, making it easier to structure monthly covered calls just out of the money. Options are incredibly liquid with tight spreads, ensuring you get fair fills. Plus, JPM's dividend adds another income stream while you run the strategy. For conservative income builders, it's one of the cleanest plays available right now. Pick number 4. Pfizer, PFE. Pfizer gives you a defensive healthcare play combined with outstanding monthly call writing potential. Despite post-pandemic normalization, Pfizer maintains strong cash flow, a healthy balance sheet, and a pipeline that keeps long-term investors confident. The stock's relatively tight trading range and moderate volatility make it perfect for covered call writers aiming for consistent premiums without wild price action risks. Premiums are surprisingly generous considering the sector's defensive reputation. Healthcare tends to outperform when economic growth slows, offering added downside protection. If you want a covered call candidate that adds sector diversification while still spinning off monthly cash flow, Pfizer belongs in your April playbook. Pick number 5. Ford F. Ford is a riskier play compared to Microsoft or JP Morgan, but it rewards you with significantly higher premiums. The auto giant remains volatile due to ongoing EV competition and supply chain dynamics, but that volatility works in your favor when selling calls. Premiums on Ford's near-the-money calls are among the richest in the market relative to the stock price. With shares generally trading in a broad but defined range, Ford lets you generate meaningful cash flow even with conservative strike selections. It's a great choice if you're willing to accept a little more headline risk in exchange for juicier monthly payouts. Key risks to watch when running covered calls. While covered calls are a fantastic income strategy, they're not without risks. The biggest is assignment. If your stock runs higher than your strike, you may have to sell your shares earlier than planned, potentially missing out on large upside moves. There's also opportunity cost. By capping your upside, you limit how much you profit if the market unexpectedly rallies hard. Earnings dates, macro events, and sector-specific news can cause quick price jumps. Managing position size, using wider strikes on high volatility names, and avoiding earnings weeks are critical parts of minimizing these risks while maximizing your cash flow. Monthly income blueprint: how to turn covered calls into a full cash flow system. Building a monthly cash flow system with covered calls is all about consistency. Rotate your position so you always have calls expiring each month, generating a steady income stream. Use a diversified mix of low volatility blue chips and select higher premium names to balance risk and reward. Reinvest premiums to grow your base of shares over time, compounding your earning potential. As you become more comfortable, you can layer advanced strategies like rolling early, adjusting strikes based on volatility shifts, and managing assignment proactively. Done right, covered calls turn your portfolio from a passive holding tank into an active cash machine every month. Covered calls might not be flashy, but in 2025's market, they're one of the smartest ways to turn your portfolio into a real income engine. Thanks for tuning in to Nexus Dividends. If you found these picks and strategies helpful, smash that like button. Share your favorite covered call stock in the comments, and make sure you subscribe for more sharp, income-focused investing content. Stay smart, stay consistent, and I'll see you in the next one.